send you out a no obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey trader, want to get rich quick? Well, good luck with that. If on the other hand you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Bork. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Friday. Nope, make it Thursday. Getting ahead of myself. 24th day of October, 2019. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. Let me put up a chart. How about a crude chart? If you can't see the chart, go to our homepage at CFRN.net. On the right-hand side of the homepage, you'll see a big microphone. Click it, follow the instructions on the next page. Within 30 seconds, you'll be registered, and that will give you one-click access to the show each and every day. On the days you're out of the office, away from the desktop, maybe you're on the other side of the planet, doing a vacation. Yeah, just grab a browser, any internet-connected browser, on any device, point it to youtube.com/CFRN/live, and during the show, you'll find a live, real-time simulcast of the show as it unfolds, brought to you by the good folks at YouTube. Thanks, YouTube. Okay, we're looking at a crude chart, 30-minute chart. We had a Concierge Trade Alert that I went over with you yesterday on the show, but when we went over it on the show yesterday, we did not have an exit signal yet. Okay? Now, whenever we have an extended move in any market, if we have an alert on that particular market, and typically we do, you have a choice. You can get out at the initial target, you can get out at the trade 2 target, but on an extended move, I can't encourage you enough to consider sticking around, at least with part of the position, for the exit signal to print. Now I'm pointing at that little red candle right there. Now on this naked chart, you're probably going, well, okay, why is that an exit signal? Maybe it printed these words on the chart mysteriously, as if by magic. No, we don't have any magic, sorry. But I'll show you. It kind of seems like magic, but it's really not. So the alert was to be long crude 54.35, right? The target overhead 54.60. Price is always trying to get to a weekly trading zone. So on a Concierge Trade Alert or a Logic 247 alert, if it's a long alert, the trade 2 target is in fact the zone overhead. If it's a short, then it's the zone below, because price is always trying to get to a zone. Okay? As we rocked through this zone to the zone overhead, we find consolidation. Remember, the most likely thing that will happen at a weekly trading zone is for price to consolidate as the market makes up its mind. Is it going to attempt the zone overhead, or is it going to retreat to the safety of the zone below? Let me add one more element to the chart, and it will enable you to see this exit signal as clearly as all of our traders see it each and every time we have an extended move. Okay. Now, notice blue and climbing. Okay? Almost a parabolic move. So you trigger in at 54.35. You get to the trade 2 target 54.60. That's a 25-point move or 25-tick move. Crude pays $10 a tick. So it's a $250 per contract trade. For the 10 contract trader, it'd be $2,500. Nothing wrong with that. That's a fine day's work. However, if you look at the chart with the CFRN indicators on it, when you see big candles like this, and more importantly, when they are clearly on the left side of blue and climbing, and the step line is on the left side of blue and climbing, because I'm doing this on a 30-minute chart. Okay, I don't have to watch every tick. I don't have to leap to get out. I can let the chart guide me. Okay, so if I choose to not get out at the trade 2 target, if I believe, because of what the chart's telling me, that price could actually make it to the zone overhead, I can stay with it. Okay, and when we get to that next trade 2 target, if things haven't changed, if price is still on the left side of blue and climbing, I can stay with it. Okay. When do I stop staying with it? Good question. Right here. Now, each time the step line moves up a step, hook right, up, right, up, right, up, right. Right here. Right here at the zone, you notice how that step line just momentarily there slipped onto the right side of blue and climbing. Then it's back to the left, back to the right. Okay, right there. That's what we call the step line crossing over. First, the step line was on the left side of blue and climbing, and then price is on the right side of blue and climbing. When you go from the left side of blue and climbing to the right side of blue and climbing, you can say the step line has now crossed over. Okay? Very good. What's next? Where is this exit signal? On a long trade, the first red candle to close below the step line after it crosses over blue and climbing, that is the exit signal. And this red candle closed just barely below the step line after the step line crossed over blue and climbing, and that closing price of this candle was 55.80. Exit signal 55.80. Okay, and this is a very, very powerful tool. We had a $250 per contract alert. $250 per contract turned into $1,450 per contract traded by doing nothing. That's right, I said nothing. When we got here, you did nothing. When we got here, you did nothing because the chart wasn't telling you to do anything. Take your marching orders from the chart. Here, the chart tells you to do something. When you see price start to walk sideways, that typically corresponds with the step line crossing from the left side to the right side of blue and climbing. And when that red candle closes below the step line after it crosses over, grab your mouse, c'est la vie, right there. So it's your choice. This is discretionary trading. You have to make choices. You can choose to get out at the trade 2 target. You can choose to get out at the next trade 2 target. Or you can choose to get out on an extended move when the chart tells you to, right there. Was this move entirely over? It was not. What happened after the exit signal? Price pulled back to the BBC. Price always reverts to the mean, and in our case, the mean is the BBC. BBC, you got to name it something that stands for bull bear cross. It's this simple. When price is above that green line, well, we anticipate higher prices. And when price gets below that green line, the BBC, we anticipate lower prices. Until when? Until it gets back above. And then we anticipate higher prices. So on this pullback to the BBC, it holds more often than it doesn't. That took us from the pullback here at 55.46 up to 56.45. That's a $1,000 per contract move. Final weekly trading zone for crude this week overhead 57.30/35. Every one of the CFRN traders, partners, passport holders, had access to this alert. Every one of them has been taught how to wait for the exit signal if they choose to. Remember, it's a choice. You get to make a decision. You can take your profit here, take your profit here, wait for this. Now, I've had $250 before, and I've had $1,400 before. I can honestly tell you that $1,400 is better than $250. $250 is not offensive at all. It's a good day's work, especially if you earned the right to trade 10 contracts. And we'll talk more about that in just a moment. Let me give you the numbers from around the world, and then we'll go to Michael, get a recap of everything that happened in the live trading room this morning. When I come back, of course, we'll talk to John briefly. We'll take a look at the Concierge Trade Alerts, the Logic 247 alerts, and today's Thursday, Dr. Tom Day. So we'll also talk to Dr. Tom about investment grade gold. All right, here we go. Cash market starting here in the U.S. The Dow down 115 points. NASDAQ up 35. S&P 500 down 3. And the Russell 2000 also down 3. In the commodity basket, crude oil up 22 cents, trading 56.19 last. Gold up $8, trading 1503.70 last. In the Asian markets, at the close, Nikkei posted a gain of 125 points. Shanghai was negative, but less than a point negative. The Hang Seng added 231 points on the session. For the Hang Seng, that's a gain of almost 1%. And in the European markets, at the close, FTSE posted a gain of 67, almost 1%. DAX posted a gain of 73, and the CAC added 30. That gives us a mixed day in Asia, green day in the UK, and so far it is a mixed day here in the US of A. Let's go to Michael, get that recap. In just a few minutes, I'll be back.
Okay. I will bring everything all the way over here. Other side of the country. There you go.
There you go.
Should be
it's all yours.
All right. Thank you. Let me bring this up. Okay. Good afternoon, everyone. Today is Thursday, the 24th day of October 2019. If you have not taken a free trial with us and you want to take a free trial with us, go to the home page here at CFRN.net. And right over here in the right-hand column, it says 5-day free trial apply.cfrn.net. If you click on that, just make sure it does. Yes, if you click on that, you will be brought to this page where all we ask for is your name, your email, and your phone number. Okay, hit the register now button and you will be sent a confirmation link. You must click on the confirmation link. Okay, we don't know that you took the free trial until you click that confirmation link. Okay. Okay. Now we'll bring up the spreadsheet. Now, if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. We had another green day today. Today, as I said, is the 24th day of October 2019. We made 5 ticks in crude and 8 ticks in gold. That put us at plus 130. This morning, it took 11 minutes and 2 trades to get to the goal for the day. At that point, we're up $100 a contract, and we took a total of 8 trades. So on the month now, we're at $2,302. That's over 17 days, averaging $135 per day. On the year, we're at $30,733. That's over 192 days, averaging $160 per day. $160 per day. Okay. Now that is 1 contract, 2 hours per day. Okay. Now the markets were really weird today. By weird, I mean, gold was at the high of the day, while the euro was at the low of the day, and crude was at the high of the day, while the ES was at the low of the day. They usually run together. They don't run opposite each other like that, typically. Well, anyway, we started out with crude. We picked up, we missed this trade right here, which would have given us the goal for the day. But we picked up 5 ticks right there on the gold. And we missed that one. And we picked up 3 more ticks right over here to get us to plus 8. We missed that. We didn't miss this. This was a break even. And I think that was all we did this morning with gold. It was. Gold just triggered a long trade. Gold just triggered a long trade from right there. If I sound like I'm shivering, it's because I am. It's cold. And I think we still have everything set to AC. Okay. So gold just triggered a long trade from right here at 1504.6. The euro. Let's see. We didn't do anything with the euro at all today, but that doesn't mean there wasn't anything to be done. We didn't get filled on this one. We missed this one, and there was one more good one right over here. Now it was going into the low of the day. That was the problem with this. Was the low of the day was so close. Since then, there hasn't been anything on the euro that you could do. So we missed 1, 2, 3, 3 trades today on the euro. On crude oil. Now with crude, this is where we got the goal for the day, right here. Picked up 5 ticks. Then we had a break even, a break even, a break even. And that was it. I didn't mark one of the trades. I'll have to go back and fix that in the spreadsheet. Since then, let's see, there was a long trade from right here. I think I had skipped that because I didn't really think it was trending very well. That's why I didn't do that. But then once it got a higher swing in place, there was really nothing you could do, sadly. Yeah, and that was it. That was it, just those few trades. Yeah. All right, on the ES, now we took a couple of break-evens right here. And the ES went zone to zone this morning. I'm sure Dwayne will probably go over that. But it had a shorting opportunity here and here that I missed, and each one of those would have been break-even. Then it dropped all the way down to this weekly trading zone and went sideways for just about an hour. Then it started moving back up to the other weekly trading zone, and that's where we got these couple of break-even trades here. Then it moved all the way back down to the other weekly trading zone, and we didn't get any trade setups on the way down there. Well, actually, no, we didn't get any trade setups on the way down. And that was it for the morning session. Let's see. If you have not taken a free trial with us, go to the home page at CFRN.net. Right over here on the right-hand column, it says 5-day free trial apply.cfrn.net. If you click on that, you will be brought to this page where all we ask for is your name, your email, and your phone number. Click on register now. Once you click register now, you'll be sent a confirmation link. You must click on the confirmation link. Okay, if you don't click the confirmation link, we don't know that you took the free trial. So you got to do that. Now the spreadsheet. This spreadsheet goes back to January 2nd of 2013. It's 6 3/4 years, just about. And it's got all of our daily results. Well, all of my daily results. Today is the 24th day of October, 2019. We made 5 ticks in crude and 8 ticks in gold, put us at plus 130 on the morning session. Today it took 11 minutes and 2 trades to get to the goal for the day. At that point, we're up $100 a contract, and we took a total of 8 trades today. So on the month now, we're up $2,302. That's over 17 days, averaging $135 per day. And on the year, we're at $30,733. That's over 192 days, averaging $160 per day. Okay. And that's it. That's it, guys. With that, we can pass it back out to Studio A. Fabulous Phoenix, Arizona, overlooking South Mountain, America's largest city park. Dwayne, if you are ready. Okay. Oh, did I not say we can pass it back out to fabulous Phoenix, Arizona, Studio A, overlooking South Mountain, America's largest city park? I think I did say that. Yeah. Okay, well, if Dwayne's ready, he can take it back. If not, then I'm going to update this in Ninja Trader 8 as well. Hold on. 2030 looks like a good year. Yep, I am done. You can grab it back if you want to. I am updating 4can right now.
So, recap of the recap.
Okay. Today, it took 11 minutes and 2 trades to get to the goal for the day. At that point, we're up $100 per contract.
It's a good bingo. Alrighty. Okay, guys. we'll move kind of quick here because I expect John to pop in a moment. I haven't spoke to him yet. Dr. Tom, he was off last Thursday, but he should be here today, as far as I know. Top of the hour. So we'll get rolling. I'm going to drag up the Concierge Trade Alerts and give you an opportunity, if you'd like, to grab a screenshot. Stand by. There we go. Okay, and there it is. Got them out last night at 8:25 p.m. The Concierge Trade Alerts are based on previous price behavior. Logic 247 is based on current price behavior. Oftentimes, the two different methodologies will point at the same important price, same important area. When that happens, it usually bears a second look. Okay? All right. Now, let me just throw this in as a little freebie. If you don't have a good screen grab tool, there is one built into Windows. You might have to go to the Microsoft Store to download the free app. It seems like some folks have it pre-installed and some don't. But grab your snipping tool like that. Click New. Holding down the left mouse key as you drag across. And then right click and you can save as. You can copy it and paste it into a Word document, into an email, into a Telegram, you know, whatever you want to do with it. Okay? Very simple. Launch the tool, which I just closed, and that's another thing. Don't close the tool. Let it sit on your toolbar. Alright, I just opened it again. So the idea is to not exit out when you're done, just shrink it. And then it'll sit right down here on the toolbar, and when you need it, oop, there it is. New. Get positioned, hold down the left mouse key, left mouse button, drag, release, left mouse button, and again, you can copy it, save as, however you want to deal with it. And then when you're done, just shrink it. Okay? Alright, so since I got the crude chart up, we'll start with crude. This 54.35, that was an alert that went out Tuesday night. We went over it yesterday on the show. If you want more details on this particular move, then you could go back to yesterday's show. Now, at the beginning of the show, I told you how you can watch the show live. We stream live on YouTube during the show, but also at youtube.com/CFRN. You'll find years and years of our daily radio broadcast. Each and every one is archived in its entirety. You can go back 2 weeks, 2 months, or 2 years. Click on a show at random. It will load like that. You can fast forward through the chit chat right up to where the recaps are. Michael's recap of the live training room, my recap of Concierge Trade Alerts, Logic 247. And what you're going to find really interesting, I think, not that it, you know, you're not going to be stunned, I don't think, as much by the fact that it just actually does what it's supposed to do, but you'll hear the same words, the same explanation, the same logic applied day after day after day after day, week after week, month after month. If something's not broken, we don't try to fix it. And what we've done with our methodology, which is simple by design, took a lot of blood, sweat, and tears to create simple. But simple is where we've arrived, and simple is where we want to stay. And the beautiful thing about simple, if it's truly simple, there's nothing to break, nothing to not work. What our methodology and indicators do is what they were created to do. No matter what time frame or market you unleash them on, their job is to go in, find the underlying rhythm of that particular market and that particular time frame, highlight it for you, so that when price reverts to the mean, as it always does, you can select a low risk, high probability opportunity to participate in this. Okay? Same thing over and over, day after day, nothing to break. We're simply mirroring the market's own movement and behavior, color-coded for your convenience, blue and climbing, above the BBC. You only want to think about being long. And the inverse is true. Red and falling, price is below the BBC, lower prices. Now, at some point, you're going to go, well, this is kind of boring. Well, the day you say that, you should hold a parade. You should fall on your face. Thank God. Because a boring trader is a successful trader. A boring trader is a consistent trader. A boring trader is a trader who doesn't wake up every morning with a knot in his stomach, wondering if today is the day you give it all back or blow up the account again. That's not even part of the agenda. Folks, hold for me just 1 second, please. I'll be right back. This will just take a second.
Okay. Yes, that is, it's funny, Dwayne recorded Valerie yesterday morning, and, about 15 minutes of it anyway. And I got to hear myself talking. I was thinking I must bore people. But try to give you little pieces of my life for entertainment. But yes, you got to keep the emotions out of it.
All right, here we go.
Okay. All right, Blaine is back.
Yes.
Boring trader is a successful trader. That's where you ended.
Yep. Thank you very much. That's right. So what's price trying to do right now? Well, price is trying to get to the zone overhead. How do I know this? Well, it's already cleared this zone, and price is above the BBC. When price is above the BBC, we anticipate higher prices. So not only do we know that price is trying to move higher, based on what the chart tells us, not some arcane mumbo jumbo, it's just a visual thing, you see it, okay? Trading's not easy, but this methodology and this indicator set makes it very simple, okay? All right, let's go through these alerts. We'll start with crude since that's the chart we're sitting on right now. Last night's CTA said to consider being long 56.20. And 56.20 is right here. There we go. All right. Important prices, important areas are almost always tested. That's another thing. If you go back and listen to archived radio shows, going back years, you're going to hear me say that again and again. I say it again and again because I really want it to sink in. I want it to become one of your fundamental market truths. I'm not asking you to believe me because I'm just some joker on the internet, okay? What I want you to do is I want you to put it to the test. Try to prove me wrong. It's okay. It's if you go in with that attitude, that guy's nuts. I want to prove he's wrong. That's a perfect attitude. Because whether it takes days, weeks, or months, at some point you're going to come to the realization that that joker was right. Okay? So on the first move above 56.20, we make it to 56.36. That's a $160 per contract move. We get back below the trigger. And the next swing high is 56.44. That's a $240 per contract trade. Back below the trigger, and so far this move has offered $210 per contract traded. 1, 2, 3. We obviously have an obstacle in our path. fresh obstacle. In order for price to do what it's trying to do, and that's to get to this weekly zone overhead, which is the highest weekly trading zone for this week, it's got to get through this obstacle. Buyers are on this side of the obstacle. Sellers are on this side of the obstacle. Who's more committed to their position? Buyers or sellers? We're going to find out. If price trades back below the trigger, sellers have the ball. If we take out this obstacle, buyers have the ball. Once buyers clearly have the ball, they're going to try to take it upfield to the zone. If sellers can take it back below this trigger, now they have obstacles in their path to take it back to this zone. Obstacle there, support, obstacle there, and an obstacle there. Now let's scrunch this up a little bit. We're going to look left. No obstacles going all the way back to the beginning of the month. Nothing to get in the way. That's a beautiful thing. This represents, right here, right now, a high probability, low risk trading opportunity. So let's do a radio for Reby. Alright. Okay. Now, 56.55 to 56.75 to 57.20. Why 20? Why not 30? That's the zone. You said price is trying to get to the zone. You said it's always trying to get to a zone. Yep. And sometimes it falls a little bit shy. Here, price obviously trying to get back to the zone below. Now, we know why it couldn't get there. There was an obstacle in its path. In this case, the obstacle is the BBC. Support. I'm doing my best each and every day, and so is Michael, to show you a logical approach to the markets. No mumbo jumbo. You don't need some kind of special degree to operate our software. The only drawback, I suppose, would be if maybe you're colorblind. I've never actually known anyone that was colorblind, but I guess you see things.
We actually do have one colorblind.
Do we? And how do they deal with it?
I think they change, because they see like green is blue, and so they change it to whatever color.
Okay, so they got a little life hack for that. Okay.
Yeah.
Cool. All right. So now the short side on crude was 55.10, and as we can see, we never encountered 55.10. Okay. All right. So let's jump to the S&P. Go. Oh, let me back up on crude for just a minute. October the 20th. That was the last Sunday night. Okay. October 20th. Right there. So that's the closing candle on Friday. This is the opening candle on the Globex session, Sunday night. That began this week. Price drops into a blue and climbing CFMA1. That represents support, which sends it up to the BBC, which, when you approach the BBC from below, that represents potential resistance. So you can see how I just squeezed it up So price actually got on the other side, closed on the other side of the BBC. And so there was just a skinny little, and this is worth talking about, okay? We can see now that price has made up its mind it's going to try to get to the zone overhead. Well, the open of this candle is 53.87. The zone is at 95. So you don't even have $100 per contract worth of movement before you run into what you expect to be good resistance. So even though there's an opportunity here, you probably won't take it, because the risk that you would have to put on would be about here, and it's bad math, bad science. You just pass, okay? That's not the opportunity I'm looking for. Okay, so price runs into resistance. It's what we expect when we approach a zone from below. When price can't get through, these are 30-minute candles, so it comes knocking at the door. 30 minutes later, it's knocking again. 30 minutes later, 30 minutes later. This time he tried to stick his hand through the crack in the door, and the door got slammed on it. Boom. I love those visuals. So now we get back below the BBC. Well, what did we say? We anticipate when price gets below the BBC, we anticipate lower prices. Did we get lower prices? We did. Now, could you go short just right here? Woohoo! I can clearly see that price is trying to get to the zone below, so I'm just going to jump on board. And then look what happens. How many times have you jumped on a move like this? I mean, this thing cooking to the downside. Yeah, baby. Let me get on board right here on the open of this candle. Okay, well, not so fast. Look left. See, price, or the market, there was an obstacle, a clear obstacle in the path. So price comes down. You get long right here at the close, right here at the low of this candle. When I say you, I'm talking about me and how I used to see things and how I used to do things and how frustrating it always was. It was before I learned to move away from, the hot tips and the secrets and the hacks and the whatnots, and just take a logical approach to the market. I know that this has the potential to prevent the market from getting to the zone. Okay. Now, this support pushes us right back up to this resistance. Remember, when price approaches from below, anticipate resistance. That's what we got. And what did it do? It pushed it right down to the zone. Spiked the zone. You could do one of two things, because you've got the leg, the retracement. You could hop aboard here, okay, because now you've cleared this obstacle. But we're looking at a situation where 53.30 to 53.20, you only got 10 points room to run. All right, so over here on this pullback, you could have gotten in here. Now, if you get in here for 53.60, you've got that obstacle hasn't moved. It's never going to go away. It made a stand and sent price back up. But if you got short there at the open of that candle, 53.60, by the time you get back into the thick of the obstacle, you're at 53.40. That's a $200 per contract move. If it succeeds in getting through the obstacle, which it did, well, then you can stay with it right on down to the zone. That's a $400 per contract move. When price hits the zone from above, we expect it to be good support. Consolidation, the most likely thing you'll see. Leg, retracement, leg, right? Price gets above, we anticipate higher prices. Price gets below, we anticipate lower prices. Here, we know price is trying to get to the zone overhead. Here, we know price is trying to get to the zone below. And look at this swing low. The swing low right there, 53.23. So 3 ticks away from the zone. That's why I say zones are an area. We get accustomed to price turning, right at the zone very often, okay? But there'll be times when it either spikes it like this or comes a little bit shy, okay? So we go from zone to zone And that move that's a $750 per contract move, zone to zone. And then zone to zone, that's another $750. Zone to zone here, that's a $600 per contract move, up $600 per contract, back down, where again we consolidate. That's what we anticipate. And then we've already walked through this, which brings us current to today. And we've already covered that. All right, so now we go to the S&P. Three things happen at a weekly trading zone. Consolidation is the most likely. I've highlighted it here on this chart. In fact, I'm going to let it sit there for just a second in case you want to use your snipping tool and grab a screenshot. So you'll know what consolidation looks like. You'll know what rejection looks like. Rejection is the second most likely. And the third and least likely, but it happens, is called the slice. And when I come across one of those, I'll show it to you. What I want you to see here is how price goes from zone to zone to zone, back to the zone, up to the zone, up to the zone, back down to the zone, up to the zone, down to the zone, down to the zone, consolidation, consolidation.
Test, test.
Hey, Dr. Tom, how are you?
I'm fine, brother. How you doing?
Good. A little early today, eh? That's all right. Come on in. We'll chat with you, and then I'll get back to this when we're done.
Sure. That's fun to
Enjoy
get a
your
little
trip
early.
last week?
Yes.
Good.
Had a good time. Good.
All right, guys, we're going to pick up with the S&P 500. We'll recap all of the Concierge Trade Alerts. We'll recap the Logic 247. But for now, we're going to talk to Dr. Tom. What are we going to talk about today, Dr. Tom?
How about risk and reward?
Risk and reward. Sounds good to me. You want the charts or the screen?
If you don't mind.
You betcha. Here we go. Ball is in your court.
Okay. Show my
We had Diamond and
screen.
Silk on the show Monday.
Oh, really?
Yeah, they're just their attitude and personality is very infectious. And they make
Yeah,
no bones
I like-
about what they believe and what they think.
I like watching them on TV for sure.
If you go to youtube.com/CFRN, I sliced out just the interview, so you should be able to find it there.
Oh, that'd be fun.
Or you can just Google
Well-
CFRN Diamond and Silk and it'll pop up.
Okay, I will do that when we get done today. The reason I wanted to talk about risk and reward today is everywhere I go, that's what people are asking me about. Whether it's church, whether I'm speaking at a conference, or just conversation with somebody over a meal. They say, how can I get the best reward with the least risk? And I always tell them, well, you look at risk first. You know, you've heard the expression safety first. You look at what your risk is going to be first, then you look at the reward. Because a lot of times we can get seduced by the rewards that are touted in certain things. And so to me, it just makes sense to check out the safety first, then to go to the reward. So
Risk is a known entity. Reward is not. Risk is
That's
fact.
true.
Reward is hope.
it's a good way to put it. I often say that squirrels have a lot more sense than most Christians. You know,
He
because
played the squirrel card. Okay,
yeah, they know to put some nuts in the hollow of a tree.
they do.
But when I searched for a squirrel in the hollow, I found this one, and it was just so cute I had to use it. So we're assuming that all those squirrels went inside there looking for some nuts, you know, during the winter time. But I love the picture. So talk about risk and reward is really the same as talk about safety versus profit. They're pretty much the same thing. So when I ask what are our greatest enemies, I'm sure everybody on this call would say fear and greed. And that's true. Fear,
greed, and me.
and me. Oh,
Yeah, most
that's
of
a
us
good
tend
one.
to be our own greatest enemy.
That's true. Well, fear can paralyze you
Hmm.
and keep you from doing anything. So that's certainly not good. And really, I told you, I'm a professor at a Bible college now. I was teaching about this last night, and people were talking about worry. I said, well, what is worry? You know, worry is actually fear. And what is fear? Well, fear is saying that I can't trust God. So really, worry and fear are sins when you want to get right down to the biblical brass tacks. So we shouldn't be operating out of fear.
The most oft-repeated phrase in the Bible, fear not.
That's right. Everybody said it. Angels on down, right?
That's right.
And of course, greed. Everybody remembers the movie Wall Street. I think this guy's name is Michael Douglas, the actor there.
Lunches for
And-
women and children. No offense, ladies, but that's what the man said.
He said, what now?
Lunch. It's somebody in the office said, "Hey, let's go get something to eat," and he was trading, and he said, "Lunch is for women and children." He was just powering through. Did another line, lit a cigar, and went back to work.
Yep. Well, this is one of the most famous lines from that movie. He said, greed is good, because greed motivates you. Of course, that's not true. Greed is never good. As a matter of fact, there's a verse that a lot of people don't connect with finance, but I do, in the Old Testament, where God told the Israelites not to glean the fields. In other words, when they're going through and picking corn or
Leave
whatever.
something for the next guy. Leave something
Yeah.
for the Ruth. She was a gleaner, right? No, am I getting
Right.
Naomi? Was Naomi the gleaner?
I think they both did.
Okay, all right.
But the point is, the poor people come along after the professionals, and they were able to find some food. So when people try to sell at the very tippy top, most things that you can record on a chart tend to go down twice as much or more quickly than they went up. So
Financial gravity.
trying to sell at the top, trying to be greedy, grab every single last, not dollar, but penny, that's stupid and it doesn't work. And again, greed is condemned in the Bible just like fear is. So what are some things that people can get into that have a lot of risk and some great potential reward? Well, I get calls 2-3 times a week from people trying to sell me energy deals, either drilling oil or gas. But these can be very risky. So what they try to sell you on is the tax advantages. And there are some pretty great tax advantages to doing energy deals. But you should never invest for tax purposes. Every deal has to stand on its own. And if the driller doesn't have a really good track record, then you shouldn't even think about investing in his deal. So there's an example of high risk and potentially high reward.
Mm-hmm.
IPOs are another one. When I was a stockbroker, I was also an investment banker. Excuse me. And I participated in a number of IPOs. Sometimes as a lead broker, sometimes we just took a portion of a deal. And I got into a stock called Novin Pharmaceuticals, which is when patches were fairly new, and they had a patch for postmenopausal women to help them with the hot flashes and so on. So obviously it was going to be a hot deal, and we got our clients in at 55 cents per share. It's actually 50 cents per share and 5 cents for a warrant, but you bought them in packages. And that warrant could be turned into an option, the option turned into stock, depending on certain benchmarks. Well, I rode that thing all the way up to $65 until it was bought out by Shearing Plow. And from 55 cents, it went up to $5 the first day, and it was up to $7 or $8 within a week. So that's an example of an IPO that really worked well. But frankly, most of them don't. A lot of them initially go higher than the initial offering price, and people get encouraged and often throw more money at it. But more often than not, by the end of the first day or within a few days, they're back down below the offering price. And IPOs are not something you can move in and out of really quickly in most cases. This one, from what I understand, Lyft, a competitor to, what am I trying to think? The other rideshare, Uber. They went public to great fanfare and did pretty well initially. But remember, most of them don't. So don't make IPOs a strategy. And then there's startup companies in what I call the pre-IPO stage. They may have an offering, but it's not a public offering. So they may be offering stock in private sales. These can be extremely risky. But again, you might buy them at 5 cents a share, and the few that actually make it to an IPO might IPO at 50 cents or $1. So you can't make a lot of money, but you take a big risk. So just be aware of it. Investigate the company very well, and mostly investigate the principals. Do background checks on them and so on, because that's where startup companies rise and fall, is on their management. Emerging technologies. Okay, there's always something new coming out. And when I was a broker, at least once a month we had people from emerging technology companies come into dog and pony shows, as we call it, show and tell. I remember, I can't remember the guy's name, but he came there and he had a company that was working with Bluetooth a lot. And I didn't get it. He didn't explain it very well. But, I thought Bluetooth was like they always would take a pirate and put black crayon on one of his teeth, to make it look like a missing tooth. So I'm thinking, it's some kind of silly thing. Well, if I'd invested in that, I'd be a very rich man these days, because practically everything has Bluetooth technology in it. But again, most emerging technologies, you don't make money on, because either they fail or they're bought out by some bigger company, and you don't get a chance to really participate in the profits. So these are, again, high risk, potential high reward. Biotech companies, maybe a little less risk, but still the vast majority of approvals that go to the FDA don't get approved. But biotech's going to be very, very big in the future. It's big now, but it's going to be huge. So somewhat less risk and some pretty good reward. But the biblical answer for all of this is diversification. You've often heard me quote Ecclesiastes 11:1 and 2, where it talks about not putting all your eggs in one basket. One of the safest things you can do as an investor or a trader is to have money in a number of different things. Don't put all those eggs in one basket, because you drop the basket, you got a bunch of broken eggs. So, what's a conservative investment, or another way of saying it, what is a safe investment? Well, if anybody tells you any investment is completely safe, walk away, because there is no such thing. But there are things that are safer than others. Now, CDs are safe, right? I like this little cartoon. I realize that certificate of deposit rates may seem very low, but I assure you they're better than anything you get by leaving your money under your mattress. Well, that's sort of true, but remember...
At least if it's under your mattress, you still own it.
That's right.
Once you hand it to the bank, you no longer own it. They own it.
It's not what it used to be when you and I started our first bank accounts, Dwayne.
That's right.
We owned the account. Now they've changed the paperwork, and if anybody wants to take the trouble to go through and actually read the documents that you sign off on, those 30, 40 pages when you open a bank account, what you find out is that you're not depositing money. You're actually investing in the bank. So the people that invested in GM, when it went belly up, when it dropped to 17 cents a share and got delisted, they lost all their money because they'd invested in the company. So it's just like buying stock. When you invest in a company, if it goes bankrupt, nobody's going to back you up. Now, CDs are up to $250,000. They are covered by the FDIC, but there's still risk there. One is that the FDIC can run out of money, as they almost did in 2008. Another is it can take months to get your money. And another is that if you're not smart and you don't realize that it's only up to $250,000, anything over that is not FDIC insured. But the biggest risk is inflation. The safest things, the things that people will tell you are guaranteed, you can't lose money. All the guaranteeing is that you can't lose your principal. But they can't guarantee against inflation. And inflation eats away at the value of your investment. So if you've got a jumbo CD that's you paid $100,000 for, and you're getting 1% on it, next year your account says $101,000. But in reality, if you've had 5% inflation, which has been the average for the last several decades, in reality you lost money. So your $101,000 will buy you what $96,000 would today. Okay, so that's not really safe. Money market accounts. Now, I love the way they did this ad, is why I use it as an example, even though the picture quality is not that great. Great rate, 2.25%. Well, that's a lot better than a CD rate. But then you look at the small print, 3-month bonus rate. And all year long, you're going to get 1.51%. So big difference there. But the biggest difference is that money markets are not FDIC insured. And most people that have money markets don't know that. And most banks don't make it a point of telling them that. I mean, again, they may have it in the fine print, but they're not like savings accounts or checking accounts or CDs. Money markets get higher return because they're higher risk. And that's a rule of thumb that you can use with a lot of instruments like bonds. We'll talk about bonds here. Corporate bonds. Do you know why they call them junk bonds, Dwayne?
Well, yeah, in theory. I mean, I don't know the technical description of what qualifies as a junk bond, but the name kind of says it all. Yeah,
junk bonds are junk.
There you go.
It's just that simple. They're corporate bonds.
What was the guy's name that made the junk bonds so popular in the 80s? Ivan or Boris or wasn't it
Borsky or something like that?
Boski.
Boski, there you go.
I think, yeah. Okay.
But think about it this way. Silver coins of the United States, okay, up to and including 1964, were 90% silver, 10% copper. Okay, since then they're all copper, made to look like silver. So if you have a coin 65 and beyond from the U.S., it's not a silver coin. But even when they had silver in them, they were only 90% silver. So they're referred to as junk silver, even though, you've got 90% silver in them. They're just basically not as high quality. as a solid silver coin. And the corporate bonds are not as high quality as far as risk as the U.S. government. There's a whole lot more risk of Pepsi-Cola going out of business than the U.S. government going out of business. Although sometimes I think that it might be the opposite. But, you know, the way the experts look at it, government bonds, even municipal bonds, even though there have been a huge number of defaults in municipal bonds in recent years, corporate bonds are considered junk. But in return, they give a higher yield. They pay higher interest. But if you see somebody with a corporate bond and they're giving you 10%, run the other way, because that company is about to go bankrupt. They're desperately trying to get cash in. And so a bond, it basically is a loan. You're loaning them money. And if somebody's that desperate that they're willing to give you 10% interest, they're not a good risk. But in general, junk bonds are not a good risk anyway. But what about treasuries? Treasuries are supposed to be the safest thing since sliced bread. But what's the important thing about treasuries? It's not capital preservation, although that's there. The reason people buy treasuries is for the yield, okay? And believe it or not, for the last century, the yields on treasuries have been more volatile than the yields on common stock, or than the stock market itself. So this bond here, whether it's 10,000, 100,000, or $1 million, its face value doesn't change, but depending on market conditions, it can range from 1% to, this is an old one that was from 2002 to 2007, up to 75, 8%, and I've seen them higher. Right now, they're averaging around 3%. So let's look at treasuries in light of inflation. Okay, the CPI, the Consumer Price Index, is what people refer to when they're talking about inflation in most cases. Well, look at this chart. This is from 1953 to 1980. The Treasury yield was always below the inflation, except for this one little point here in 1969. It popped its head up and then retracted, kind of like a turtle, and popped its head back out again, and there it dropped down, and it stayed lower the whole way. Now, it sort of tracked with inflation, which is what you would hope for, but it never really beat inflation. But then from the 1980s on, and this only goes to 2010, there's this dramatic difference. The Treasury rate just dropped like a rock over that, 30-year period of time, 29 years. And inflation just kept going up and up and up. And by the way, that's what the government says the inflation is. Anybody ever wants to know the truth about government numbers, you know, like unemployment, inflation, the money supply, you go to shadowstats.com. Shadow and then stats and then statistics.com. And they're a private economist has this website, and there's a lot of free stuff you can get, and also if you're a professional and you need really accurate data customized for your purposes, then he has a sales side like most websites do, but you can get a lot of great information for free. And during the same period, they're showing the inflation rate going up to 2.25. It actually went a lot higher than that, the real rate. So the Treasury yields were way less than what you see. And of course, in the 9 years since 2010, it's only gotten worse. Inflation is higher and treasuries are lower. So while they're safe, they're not really safe. They're safe as far as their principal. Someone will give you dollars when you sell it, the same number of dollars as the face value of the bond, but the dollars are worth less. So is that really a safe investment? I say no. So when you're in safe investments, CDs, money markets, bonds, anything that's guaranteed, has a guaranteed return, is also guaranteed to lose you money every single day.
But it is a controlled bleed. You know exactly how much you're going to lose every day, give or take. Not that that's a good thing. I'm just saying.
Yeah, it's not like there's going to be a huge crash and the CPI is going to jump up like crazy, and so your inflation rate goes from 5% to 20%. But if we do have a serious crash in the stock market, which more and more people are predicting, not just a correction, a crash, or worse, if the dollar crashes, then the control is gone. It's like an artery spurting blood out, and you bleed out pretty quickly if you can't clamp that artery off. So I love this quote. I just absolutely love it. It's hilarious. And why he would say something like this publicly, I don't know. But as the former chairman of the Federal Reserve, the ones who are supposed to be controlling our economy.
Yeah, he's the same guy that said the 90s would be a decade of anemic. Oh, wait a minute. No, he was the irrational exuberance guy. Somebody else said the next decade will be a decade of anemic growth. Who was that?
Right,
Anyway,
exactly.
yeah.
And yet people got hugely rich in the 90s. But the
There was
fact
more
that our
wealth creation in that decade, I think, than ever before in history. That may have been eclipsed by the Bitcoin billionaires or millionaires. I don't know. But anyway, go ahead.
Well, since there's not so many of them,
Right.
I mean, only a tiny portion of people invest in
only a tiny percent of people even know what it is.
That's true. But everybody, his brother-in-law in the 90s, were investing in the stock market.
Yep.
You know, they had that old saying that, when your valet car parker is giving you stock tips, it's time to get out of the stock market. And the guy that shines your shoes, the guy that waited your table, is talking to you about his portfolio. Everybody's in it. It's time to get out. But this quote, I mean, I know you can read it, but I just want to read it out. The fact that our economical models of the Fed, the best in the world, have been wrong for 14 straight quarters does not mean that they will not be right in the 15th quarter. I'm like, what is this guy even thinking? I mean, people can look this up and find it out, but why just throw it out there, and say, yeah, we've been wrong for 14 quarters, but we might be right, not even will, we might be right in the 15th quarter. Just blows the mind. Another one, Ben Bernanke, he made this statement before he was actually the head of the Fed. This was at a financial conference in New York. And he said the U.S. government has a technology called a printing press that allows it to produce as much U.S. dollars as it wishes at essentially no cost. The quote goes on to say, all it really costs is just some paper and some green ink. So here's the guy, again, that's in charge of our economy. The Fed has more control over our economy, our interest rates.
But the Fed is not the U.S. government. This statement is erroneous.
Well, yeah. I mean, he's trying to equate himself with the U.S. government. But, no, the Fed is not. But the printing of the money, he's correct. The Treasury prints the money. It's the Fed that orders the money. Okay, so he can get away with saying that the U.S. government has this printing press because the Fed doesn't print anything. They basically get the government to print it up, and then the government loans the money to the Fed. So the government produces the money at no cost.
The money,
free money.
he's correct.
They loan it to the Fed, and they have to pay interest to the Fed. So if by some miracle China just decided, hey, they wanted the United States to be stronger so they can buy more cheap crap from Walmart, I call Walmart China's outlet mall, but if by some miracle they decided, well, it's good business for us, we'll pay off the U.S. debt, we got the money, and then the U.S. will be more economically profitable and people have more money and they'll buy more of our garbage. Even if they did that, the very next day we would be back in debt again if we didn't abolish the Federal Reserve System, because every day the government's producing money and loaning it to the Fed at interest. Okay. I'm backwards. The Fed is loaning the money to the government, via treasuries, because they go and they buy up the treasuries. And so the government is paying interest, bottom line, on all the money that's produced. So if we paid off our national debt, we would be back in debt the next day, and it would just start growing again. Last time we had a president, and a lot of people put this guy down because he was sort of a rough character, but Andrew Jackson, he was the last president to leave office with essentially no debt. $15,000 was the entire U.S. government debt. Most people listening to your show today probably have more debt than that. But from Andrew Jackson on, the national debt just kept going up and up and up under every president. A lot of people misunderstand the difference between the debt and the deficit, and they say that Bill Clinton reduced the national debt. He did not. There were, I believe, 2 years during his reign where there was less spending than taxes. So we had a slight surplus in those years. All the other 6 years, there was a deficit. And overall, there was a lot more deficit than there was surplus. So that deficit gets added to the national debt. And so there's never been a president, never been any appreciable period other than those couple of years when the national debt went down. And of course, everybody knows that under Obama, the national debt actually doubled. That had never happened in history. But during his 8 years, the debt went from about 10 trillion to roughly $20 trillion. So that's never happened. He actually added more to the national debt than all the presidents that existed before him in a period of, I think, about 220 some years. He managed to double the debt. And he told us he was going to do it. He told us that he was going to cut the military by 50%, which he did, and that he was going to put coal out of business, which he almost did, and that he was going to raise taxes, which he absolutely did, and that he was going to spend a lot of money. So all those things together ended up with a doubling of the debt, which is something that the, I can't remember which one it was, but one of the chairman of the Federal Reserve, chairman of the Joint Chiefs of Staff, said that the national debt is the greatest security threat that the U.S. faces. Now that's pretty serious, because he knows the military capabilities of China, Iran, and Russia, all three enemies of ours. And he knows that they're a danger to us, but yet he said that actually the national debt is a greater security threat, because if we ever have to go to war against these guys, it's going to take a lot of money. And who's going to loan us the money when we already have so much debt that at one point we had lost our AAA credit rating worldwide. So when I go around and speak at these conferences, people say to me, oh, well, the U.S. would never devalue or replace its currency. Because I'll talk about what's happened in other countries. How, the German hyperinflation got so bad that you could have bought an entire block of Berlin for 25 ounces of gold. A city block with buildings on it. How it went from 25 cents per mark U.S., in other words, 4 marks to the dollar, to 4.2 trillion marks to the dollar. How Venezuela in modern times, Argentina, I'm sorry, I always get the two of them mixed up. Argentina had such high inflation that got as high as 20,000% per month. And instead of paying people twice a month, they had to pay them twice a day because the money was losing value so quickly. So people say that would never happen in the U.S. Well, actually, it has happened. We're presently on our third currency. I bet you most people didn't know that. The continental dollar turned out to be worthless. It was our first currency, and because it was backed by nothing, just like today's Federal Reserve note. So eventually, 12 years after the Revolution, when we got our Constitution, which, by the way, is the longest, we're a pretty young country, 204 years, something like that. We have the longest lasting Constitution in world history. No Constitution has ever survived this long. The Democrats are doing their best to tear it apart and tear it down, but it's still there. But it was not until we got the Constitution that we defined what money was. And again, it's the only constitution worldwide that defines money. So our founding fathers were responsible. They wanted to make sure that politicians in the future couldn't just play with and manipulate our money like they do in banana republics. That's why other countries do not define what money is. But they said what money is. They said money is gold and money is silver. That's it. Okay. And it was partly because of the continental dollar, because patriots, took real money, gold and silver, and bought these continental dollars with them to help the government effort. Because the people we needed to buy the bullets and guns from, and food and clothing for our soldiers and so on, other countries like France would not accept our paper money because they knew it was worthless. So these people were patriots. They knew they were taking a big risk, and they lost. The government eventually gave people $1 US backed by gold for every 100 continental dollars, and even that was being generous. Well, after we got the Constitution, we got the United States dollar, and whether it's a $20 bill or a $50 or $100 bill, look at that gold seal on the left side. It says this certificate is legal tender in the amount thereof in payment of all debts and dues, public and private. Those words are still on the fake money, but the words above and below gold certificate are what makes the difference. If you look up at the very top, it says this certifies that there have been deposited in the treasury of, then you can drop down to the bottom, the United States of America, $50 in gold coin payable to the bearer on demand. So you could go with that $50 bill, you could go and get two $20 coins, which are an ounce apiece, and a $10 coin, which was half an ounce. And it was real money. You've heard the expression, good as gold. Well, that's where that expression came from. And the expression, not worth a continental, that's where that came from the continental dollar. So we had real money for the first time because we had real money circulating in the United States before and after the revolution. And during that 12 intervening years, when we were governed by the Articles of Confederation, and before we got the Constitution, there was money circulating, real money, but it was British and Spanish money mainly, which is kind of ironic because we're fighting a bloody war for independence against the British, and yet we're still using their money because until the revolution was successful, we were all British citizens. So there was a lot of British gold and silver coins circulating, and there were a lot of Spanish coins. But it was only after we got the Constitution that we started minting our own money and real money. We were printing money before, now we're minting money. The Federal Reserve note, look at this. This note is legal tender for all debts, public or private. Pretty much the same language and pretty much the same design. They wanted people to think that this was the same thing, but what's missing? There had been deposited in the Treasury of the United States gold or silver payable to the bearer on demand. That's not here anywhere. This is monopoly money. So basically, it was a second incarnation of the continental dollar. It was fiat money. Fiat is a word, it's a government word, and it's reserved for something that the government declares. If the government says it, it's true. Okay. So if the government says this is money, then by definition, it has to be true, even though it's a lie. Okay. That's what fiat means. And that's why they call this fiat money. You remember Ronald Reagan's famous statement about the 9 scariest words in the English language? He said, I'm from the government and I'm here to help. Okay. Because the government, even though sometimes they have good intentions, I'm not saying that everybody that works for the government is evil. A lot of the ones at the top, the ones that are pulling the strings, are some pretty evil people. But there's a lot of good people that work for the government, and they think they're helping people, but they're not. Tell you a little quick story. There was a U.S. congressman went to an Indian reservation, and because they give a lot of money to the reservation, the chief gathered all the people together, and he said, well, I'm from the federal government, I'm your friend. And so the Indians cried out in their own language, Hoya, Hoya, And then he said, anything I can do to help you, I'm going to do it. And they even louder cheered, Hoya, Hoya. And he says, bottom line is, you can depend on and you can trust your government. And they gave one last resounding, Hoya, 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 So then the chief decides to take the congressman on a tour of the reservation, and they were crossing a cow pasture. And he said to him, he says, be careful as we walk here. You don't want to step in the Hoya. So
that's pretty funny.
I thought so.
Yeah.
I like that one. Okay, so we're talking about risk and reward. Very simple formula. A high upside potential equals a high risk potential. Okay, and that's true with anything. I mean, the way you trade your futures, you can make a lot of money, but I'm sure you warn everybody, if you're not careful, you can lose money, right?
All of your money and then some.
Yep. So you have to tell people about the risk, but a lot of people don't do that. I mean, that's one reason why I like you, why I come on your show, is because you're honest with people. And unfortunately, a lot of people that have systems and software and advisory services and so on to sell are not honest. All they talk about is the reward, and they don't talk about the risk.
And that's just wrong.
So
that's just wrong.
Here's 4 key principles that I live by number one, cash is trash. Our money is losing value every day. When I say value, I'm talking purchasing power. You were going to say something?
Oh, no, sir. No. I'm just listening.
Advisory services,
all right.
Someone to sell, are not honest. All they talk about.
Sorry, I accidentally launched a browser with you talking. So keep going.
I thought I recognized that voice.
Yeah, I was trying to get the live page fixed on CFRN because people that want to watch the show live go to one of the ways to do it is youtube.com/CFRN/live. So I just fixed it so they can go to CFRN.net/live. And still brought to you by the good folks at YouTube, but I'm just rerouting it from YouTube through our site just for convenience sake.
That's neat. You have to show me how to do that one time.
I'll be happy.
Well, I heard that voice and I thought,
that
boy, that really sounds like an intelligent person.
Yeah.
You know?
Just all right.
That was my first reaction,
Right.
Okay. So cash is trash. I mean, your $1,000 a year from now will still be $1,000, but the dollars will be worth less. So it's not value, it's purchasing power that we really want to look at. It's not the price, not the numbers, but what you can buy with it. So in that regard, cash is trash. And whether you keep it under your mattress, or whether you put in a 0.5% savings account or a 1% CD or a 2% bond, it's still losing money every single day, losing purchasing power. So bullion is better. Okay. Why is gold bullion better? Well, it's got a 3,000-year history. It's actually a 6,000-year history that gold and silver have been used as money, but we have 3,000 years where we have actual data that proves that an ounce of gold has bought the same amount of food, clothing, labor, materials, and shelter. So bullion is certainly better than cash, okay? But it's not an investment. That's the one thing I always try to get across to people. It's not an investment. Bullion goes up because the dollar goes down. So it's a simple calculation. The dollar's worth less, so it takes more dollars to buy something that's solid like bullion. But don't think that if you bought gold 20 years ago at several $100s and today it's at $1,500, that it was an investment. You didn't make anything. Oh, I actually did that. I bought $250,000 worth of gold when I was a very young man. And I bought it when gold was at $200. Not too many people remember gold at $200, but
right.
I do. And
well, most people aren't as old as you are. I'm just saying.
Well, that's true. But thanks for reminding me.
Okay, you bet. It was my birthday yesterday, so I'm allowed to do that.
Well, happy birthday.
Well, thank you, sir.
How many centuries old are you?
The big 6-0.
6-0. You know what that
and
means?
I sound like a
don't you?
teenager. I mean, it's just crazy. So, but that's what
I
the
know.
calendar says. That's what my driver. I keep checking my driver's license, hoping there's been a misprint, but no, it's a true story.
But you don't feel 60, right?
No, I really don't. When I first wake up, when my feet first hit the floor, I feel like 160. But a couple coffees later, the fog parts, and here I am.
Yeah. Well, just keep exercising, eat right, and praying, and
okay. Well,
you'll live to a ripe old age.
I got the praying part. I got the praying part down. I have to work on those other two. So.
Okay. Well.
Eating right, exercising. I've heard good things about that, stuff.
Exercising, yeah. Actually, I look at it like this. I'm 10 years older than you. I don't want to be a burden to my family. I don't want to become an
you're not
invalid.
70. I met you.
I'm 71.
You look like a teenager. I may sound like one, but you look like one.
Well, anyway, bullion is better than cash because it actually preserves your purchasing power. But please, please, please remember, it's not an investment. Investment grade gold grows in value. That's the key. It grows in real purchasing power. I've told the story, I'm sure I've told it on your show in the past, about how 100 years ago a house cost $4,000, a 3-bedroom, 2-bath house. But in gold, it cost 200 ounces of gold because gold was $20 an ounce. So 200 ounces of gold at $20 is $4,000. Today, 200 ounces of gold will still buy a house. Now, how is that possible? I mean, the house has gone up 60, 70 times in value. Well, it's because, or in price, it's because the house isn't worth 60, 70 times as much. The house is only worth what it'll do for you, which is keep the rain off your head and keep the dust from blowing into your living room. So it's not really worth 60 or 70 times as much, but neither is the gold. The gold has gone from $20 to $1,500. Is it worth that much more? Of course not, because gold is worth what gold will buy. 100 years ago, I bought a 3-bedroom, 2-bath house. Today, the same number of ounces of gold will buy a 3-bedroom, 2-bath house. So that's why investment-grade gold is important, because it grows in real purchasing power. And then the final principle is European IGG, investment-grade gold, rules. It's a little play on the monarchy of England in particular, because that's mostly the coins we buy are English coins. And we're buying them at 10 cents on the dollar to U.S. rare coins. So that's why about 7 years or so ago, we stopped buying European coins, and now U.S. coins, and now we buy almost exclusively European coins. 100 years of stability. If you look here on the right, the top right, that's the French 100 francs. If
And
you
who's
go
the guy with the wings?
That's his name is called Winged Genius. Okay.
Seriously?
That's what they call him,
Okay,
the genius. And if you see, he's writing on a tablet, and the word
Is this a figure out of
Constitution.
mythology, or?
I think it is.
Okay.
The main reason why they changed it is, like all monarchies, their coins up until their Revolution had pictures of the king or whatever on them.
Can you do that again?
Revolution.
We're such a cultured radio channel.
Yes. And if you look around the rim, it says République Française.
Oh my. I get goosebumps.
And I could even say croissant in French.
I
That's
can eat
about
one,
it.
but
That's all the French I know, other than oui and no. But anyway, after they had the revolution, chopped the heads off all the kings and royalty, they're a republic now. Okay, so they can't have monarchies on there. So they put the Winged Genius on it, and that is their flagship coin. It's called 100 francs. It's a 1-ounce coin. Now to the left, you see, going counterclockwise, the guy with lots of curly hair. It amazes me how, like in this case in 1825, they had the technology where they could get that great a detail on their coins. I mean, I see some coins where you can see the nostril hair on the king, you know.
wow.
But that's Georgius IV de Gratia. That's Latin for George IV of God, because they believed their kings and queens were not deities, but were put in place by God. That's what's called a 5 pounds today, what used to be called a 5 guineas. And it's a little heavier. It's 1 1/3 ounces. So about the same diameter, but thicker. They wanted to have the biggest gold coin in the world, and they did. That's the largest regularly circulated gold coin ever in history. Okay. So now if you drop down from there, we have the Spanish 8 escudos. You know, England went for decimalization like we did, but Spain, everything was in 4s and 8s. So they had, 4 escudo, 8 escudo, and so on. And that's where the expression pieces of 8 comes from. Because the original ones were actually scored to where you could break them up into 8 different pieces, and those were the silver coins. And each little pie-shaped piece could be spent. And then finally, bottom right, you see a 1932. I particularly grabbed that one because that was the last year that the U.S. issued gold coins. And that's called a double eagle or a liberty, and that's the $20. So they're different denominations, but they're all roughly 1 ounce, and they're all the key coin, the flagship coin of the nations. 40 years ago, all 4 of these coins would sell for the same price if they were in the same condition and the same rarity. Today, the U.S. coin sells for roughly 10 times as much as its European cousins. And that's one reason only, and that's the independent third-party grading. So when we look at European rare coins, a lot of times people will say gold's at a bubble, Well, sometimes bullion gold can be in a bubble. There have been 10 out of the last 100 years that it's gone down in value, mostly because the dollar is going up in value. But the rare coins, the high-grade rare coins, haven't had one down year in the last 100 years. So they're definitely not in a bubble. Matter of fact, they're severely underpriced. Buying them 10 cents on the dollar, that's tremendous. So that means that the downside
anytime you can get a
risk is
10-time markup on a product, goodness, that's about as good as it gets.
Your mama.
Yeah.
Yeah.
That was my rule of thumb all the years that I ran call centers and employed the disabled and the disadvantaged. I always looked for products that we could get a 10-time mark on. That allowed me to pay our employees quite well, and to build an orphanage, and to build a home for battered women and abused children, and a home for men in recovery. You can do a lot of good works with a 10-to-1 markup.
Yeah. Well, people always misquote the Bible and say that money's the root of all evil. It actually says that the love of money is the root of all evil.
Preach it.
If you love money and you hoard it for yourself, that's one thing. Okay, but one of my favorite expressions is, God will give us as much money as He can trust us with.
That's right. Well said.
So He trusted you with a lot of money because you were using it to help other people. So anyway, the European rare coins have a very minimal downside risk. You can't say the same about U.S. rare coins. They have more risk because they're really high. They've gone up. They pretty much peaked out if you look at charts. But what I really like about the European coins is there is virtually an unlimited upside reward. I could show you examples of coins that people have found in the dirt, or that they paid $1,000 for, or they got in an auction for $10,000 that are worth over $1 million today. So the upside is, the sky's the limit, really, if you buy coins that are undervalued. It's like going back in a time machine. When Greg, who's our buyer in Europe and who teaches on our webinars that I hope everybody listening will attend, when he told me about the old days when he was buying $5 quarter-ounce U.S. coins for $30, okay, and he asked the vendor, he said, "Do you mind if I pick through them and just pick out the better quality ones?" The guy said, "Okay, but I'll have to charge you 10% more because you're going to be tight on my table here."
Right.
So he picked out the 6 best coins off out of 100 or so off this guy's table and paid $33 for them. Okay. One of them today would grade as an uncirculated MS60, I think it was. So it's worth $25,000. Okay. But the other 5 were all very high grade in either MS64 or 65. And they're worth about $150,000 a piece. And he bought them for $33. Okay. It was because of the high quality coupled with the rarity. So my first thought was, man, I wish I could go back into a time machine and go to that coin show with you and bring all my life savings and buy a whole bunch of coins at that price. And he liked that idea, so we actually incorporated that in one of the webinars. You can go back into a time machine. You can go back by buying coins in Europe to what the U.S. coin market was like 40 years ago. Before they modernized it, before they came out with the independent third-party grading system that allowed coins to be independently valued by a third party and that everyone would trust. So that's what we call the time machine. So what about liquidity? I'm almost done, and I think I'm right on time. Historically, high-quality rare coins have always been liquid. When you see an auction for rare coins, the ones that are high grade and high rarity, they're always gone. They always sell out at every auction. Now, some of the ones that are not such good coins, maybe they're scratched, or maybe there's like U.S. coins where millions of them were made. Some of them will be left on the table. They won't be auctioned. But the really high quality, rare coins are always liquid. So in summary, we got low risk, we got a huge, virtually unlimited upside potential, and good liquidity. Now these are not as liquid as bullion. I want to make that clear. I mean, with bullion, you can go down to any coin shop and flip your coin on the table and get cash for it. You might not get what it's worth because a lot of these guys will pay you under spot, but you get pretty much what it's worth. With a high quality rare coin, it's more like, say, buying a custom home as opposed to buying a tract home in a housing development where all the houses are cookie cutter and exactly the same. Price discovery is easy. You just average the last 3 sales together and you've got the price of the house. Whereas this custom home might have 6 bedrooms and 8 baths and a horse stables and a tennis court and a swimming pool. So it takes a certain kind of person to buy that. So you can't just flip rare coins, but it's worth it because you're actually making money. You can make double, triple, quadruple your money, depending on the amount of time you hold them, which you can't do with bullion. You can hold bullion till the cows come home. So I will sacrifice some liquidity. I'll take good liquidity rather than instant liquidity in order to make those kind of returns. So, free. Not too many things are really free in this world, but if you go look down at the bottom there to CFRNgold.com, remember to put the www in front, we will send you the free Gold Education Starter Package, which has some fascinating articles, reports, and videos in it. No charge at all. And we'll also, with your permission, send you webinar invitations. We do webinars every Monday night. And they're Christian Financial Concepts webinars. We talk about all different aspects of investing. But since there's so much interest in gold, every other week we do a webinar on gold. And then in the off weeks, we talk about general things like budgeting, getting out of debt, insurance, real estate, and so on. So CFRNgold.com is where you want to go. And we would love to see other webinars. I've had people that have master's degrees in business and finance and investments tell me they've learned more by attending a year of our Monday night webinars than they did in all their years in graduate school. And there's a reason for that. I took a lot of business courses when I was in college as well. And guess who's teaching them?
Who?
The guys who were trained in business but couldn't make it in business.
Yeah. Those who can't do teach, is that what you're saying? Teach?
Yep, exactly. They failed at business, so they came back to the safety of academia and a regular paycheck. And basically what they're teaching us what they know. So basically they're teaching us how to be failures. So I was smart enough to recognize that, if this guy is such a good businessman, why is he here teaching for $50 an hour, $35 an hour, whatever they were paying him, when he could be out there making millions of dollars? It's because he can't. So
why do you
I
teach?
would just read it. Why do I teach? Because
I know you can do, so there's got to be more to the story.
Yeah, I actually love teaching, and it's my ministry. I've been recognized by Chuck Pierce and Peter Wagner as a teacher in the body of Christ. It's the fivefold ministry. So I can't help but teach. I mean, when I got saved at 13 years old, within 3 years I studied the Bible enough. I was teaching Bible studies for young people. When I learned how to play the guitar, I started teaching kids in our church how to play guitar. Now most of them can play much better than I do. And when I started to learn about money, when I was a stockbroker, I hated cold calling. I did it one day, and I told my manager I would never do it again. I don't like it when people call me up and pitch me on things, and I didn't invite the call, so I'm not going to do it to somebody else. So I turned to education, and I started teaching people about finance.
How to make cold calls.
But I actually got a job teaching at the local junior college, and people would come, they would listen to me, they see I knew what I was doing, and they'd say, "Can I have your business card? I would like to open an account with you." So I'm not ashamed about it. I teach to introduce people to investment grade gold, and I have my ministry, which is Christian Financial Concepts. I have my business, which is Golden Art Treasures. When you go to CFRNgold.com and fill out the form, you'll be taken into the website, and again, there's a wealth of information there. So I find that's the best way to do it, because I'm not a good salesman, but I am a good teacher, and so people buy a lot of gold from me, but I don't sell it to them. That makes sense.
I understand. I
So,
really do.
Any questions?
No, it's been a wonderful, informative hour, as it always is every Thursday, with our dear friend, Dr. Tom. Dr. Tom. So, what's next on your agenda? We're coming up on the holidays. I know you'll be putting on performances. You'll be singing the Messiah. You'll be doing pop-up dances in the mall. Seriously, no. What do you got? What do you got planned?
Well, last year we did in the mall. We went down and did a pop-up, what they call a flash mob.
Yeah, it's a flash mob, yeah.
And I took my guitar down there. We had a great time doing Christmas carols.
I would love to experience one of those. Not know what's going to happen. Just all of a sudden, you're on the set of Glee. And there it is.
Well, I've got a whole folder on my desktop full of some of the best flash mobs I've seen, and I just love it. To me, it's a great thing. One of my favorite ones. This was in Vienna.
I think that could be a business. I do. You call up and you order a flash mob for Valentine's Day or your wife's birthday or your anniversary. You're out having a nice dinner, and all of a sudden, the waiter starts singing, and yeah.
You are definitely a multipreneur. I mean, you really have an entrepreneur's mind. I wouldn't have thought about that as a business, but you're right. It is.
I think that's well worth $500 a pop. And now again, you can't have a large mob with that, but you find 5 to 7 actors who, they're still trying to, get on the big screen, and they just need to pay their rent. And so you have a little theater troupe, and they just, on a busy Friday night, they might have to hit 4 different restaurants. That's $2,000. So anyway,
Yeah.
pay them $100 a piece. Yeah. All right.
All right. Well, listen,
As
thank
soon as you
you
think
for
up the
having
name
me.
of the company, let me know, and we'll get started on the paperwork.
Okay.
All right. My friend, thank you so much,
Flashers
Dr. Tom.
Incorporated. Flashers Incorporated. How's that?
I'm sorry, say it again.
Flashers Incorporated.
Flashers Incorporated.
I don't think we ought to name it that. That doesn't work.
I think we could call it Mobbed Up Inc.
Mobbed Up. Okay.
Mobbed Up Inc. Yeah, I like that.
Well, listen,
Okay, start
Dwayne,
paperwork.
Lord bless you, and
You too, brother.
Lord bless all your listeners, and
Thank you.
we'll see you next week.
Okay, look forward to it. Have a great day, Dr. Tom.
Thanks. God bless.
Bye-bye. Okie doke, folks. Let me grab the screen back. We'll go back where we left off. Oh, John. Let me see if John's in here. Hey, John, are you there? I'll jingle his phone here in a moment and let him know. In fact, I'm going to do that now as we talk. We're already at our 2-hour mark, but I told you I was going to go through the recap, and I want to do that. There we go.
Hello, Dwayne.
Hey, John, you ready to pop on?
Yeah, I didn't realize
Okay.
he was coming on early, but I'm ready now. I'll come right
Okay,
on. Thanks.
okay, bye-bye. Okie doke, you heard it live. Nothing carefully scripted here. This is just raw radio at its finest. Okay, on the S&P, we had a Concierge Trade Alert to belong 3015. As you can see, price never got there, did it? Oh, did it? Would we hit 15 and a quarter? Okay, right there. Now, here's the deal. Okay, let me put the other line on there so I can explain this properly. Okay, and okay. 29.96. Each night, when our traders receive the Concierge Trade Alerts, and once they're issued, they're good for the entire session. All right, 29.96. You can do it. Yeah. Go to your chart, whatever charts you trade, and we do the alerts on the S&P, the Dow, Russell, Crude, NQ, bonds, gold, and soybeans. That's Concierge. On Logic 247, I also do copper from time to time, currencies from time to time. Really anywhere that I see opportunity develop, that's what we're going to focus on. Wherever opportunity presents itself, that will be the next Logic 247 alert. So when your alerts come in, you can pick them up. You know what? To everyone listening, it's just redundant emailing these and putting them in the Telegram channel. If you're on your computer to check your email, or even on your phone to check your email, you can just as easily click on the Telegram channel. I really want to get everyone trained to just using Telegram. We use it for just about everything. It's an incredible free app. It's fast, it's secure, there's no advertising. I'm sure it's financed by the CIA or somebody like that, but you know what? I don't care. It's a beautiful tool and we use it. Okay. When you access the Concierge Trade Alerts for the session, go put 2 lines on the chart. All right, we'll pick up right here at the 2 lines. Everything in between is the market making up its mind. John, welcome to the show. Good to have you with us.
Yeah, thanks. Good to be with you. Listen, we got another one of these kind of weird markets today where the S&P and the Dow and stuff are
going
down.
in opposite directions. Yeah, that is such an anomaly. This is a very, very rare occurrence. I mentioned it a couple days ago when it first started, and
it's
I never
often a
thought it would last
precursor
this
to
long.
either a big breakout like we said might happen yesterday, the day before. Remember, I said if some news comes out on a stock, it could really drive it up, and it became apparent yesterday afternoon that the market didn't want to go down anymore. And I actually got somebody out of the VIX right at the top just before it kind of plunged yesterday.
Here's how we're looking on a weekly chart of the S&P.
Yeah, I mean, look, it's still a little troubling because if we were to break down from here, could be a problem. And what I'm sort of struggling with is, I think who's the lady who just took over the European Bank?
Christine Lagarde.
Right. I think she sort of did some things this morning, and as a result, gold is soaring. Well, not soaring, but
what did she do? Did she make some kind of policy?
You know what? I kind of had a busy day. I haven't had time to see what happened, but it obviously gold is up. You know, it was kind of interesting because I said to people yesterday, look, hold on to the gold, even though it was kind of a little bit weak yesterday towards the end of the day, and it kind of dipped down, and in the morning it looked like it might be in for a bit of a pullback. And that's the reason why I said yesterday I wasn't totally convinced that gold was ready to go yet. But having gone down and reversed upwards like it did this morning, I mean, basically when I came in, it looked very good around the 1490 area, 1496 rather. And
that
now
was our
we're
Concierge Trade Alert last night. John was considered being long 1496. Initial target was 99, and then we've got another target overhead at 1510.
It's $1,000 move, not bad. Not bad for a day's work or half a day's work.
Nice work if you can get it. And the good news is you can. So
that's kind of funny. By the way, I listened to the
interview. Oh, good.
Yeah, I thought it went very well. It was kind of a good, a lot of good back and forth, and it was really kind of a unique. I think
they let their guard down just a little bit. I mean, they're very polished, very professional, but I think they felt comfortable and just were kind of at home with us.
They definitely did, and I think we out of all the shows they've done, I think ours stands out as somewhat unique. Just for
be sure to share it with all your Twitter followers.
Yeah, for sure. So anyway, the Palladium is up $40. Can you believe it? I mean, I'm super. I think I'm the biggest bull in the world on Palladium, and I haven't been since 800. So nobody can take that away.
Palladium. There we go. There's Palladium.
Remember I said yesterday it's probably going to have a dramatic spike to the upside. It definitely looks like that's on the cards now. So it hasn't. Platinum is only up $5. Platinum is probably. Look, if you didn't get it at 900, it's obviously more risky buying it right now. But I still think it's one of these. It's kind of like buying Roku back at 25. You know it's going to go up.
John, in 2000, when the .com right before it imploded here, do you think that had any effect on the price of palladium?
There were different Well, yeah, definitely, because the economy was going to slow down, and that was probably part of the reason. There were the issues at the time with palladium. Maybe that's where palladium first started being used in preference to platinum.
Okay.
Although you remember, platinum made an all-time high around 2007. So I think that first run-up in palladium was just a shortage of supply. It was just very tight supplies that caused that run. And maybe it got worked out for a while. But when you look at the base, actually, if you look at this base and how long it's been going on and the way we're going up right now, it's not unreasonable to believe that 2400 is a potential target for this.
So this leg here, this went from 200, 200 up to, we'll call it 200 to 1,000, 800 point move. This move kind of started here. So we've pretty much duplicated this leg here. And I don't know, that's not how you really do a measured move.
It looks like it's going to go parabolic, this blade.
Well, it does. Yeah, so I'm wondering if we get a second duplication, maybe we get this same amount again. That's a possibility. What kind of upside targets do you have?
Well, 2400 is my target right now.
Okay.
Could it go higher? If it goes past 25, it could get to 27, maybe even 30. 3,000, but 2,400 is a reasonable objective, from here. So the gold, look, it's an unusual looking flag. If you look at the gold, on the daily basis, we're clearly breaking out. It seems to go up with ease. I did say yesterday, you've got to buy these turns, because every single one of them seems to be worth anywhere from $10 to $30 upside. They're actually up to as much as 40. So if you could put up the daily for a minute.
Yeah, sure can do. Daily you want daily on gold?
Yeah.
Okay. Let me just jump back here.
Okay, remember we made a comparison with the first leg. Okay, look at the way that is breaking out here.
Yeah, it's nice, right?
It really is. And look, you've got a little baby doji that we pointed that out, that first little reversal, as being the buy. That's where we put people in. And look at the next day, had a bigger range, and today is a very big range. So that's a really good, I'd say we're certainly looks like we're headed for 1520. I do think, actually, Dwayne, that the Fed situation next week might involve, possibly with the gold stocks, it might involve a spike, a retest, possibly the 1500. If we are at 1520 or 1530, we could potentially come down and test the 1500 and then go back up. So if it does come down to 1500, I'd be inclined to try and buy it on that dip if it happens. If you go back to that larger chart that you had before, I think it's worth taking another look at that. With more info, right, going back a couple of decades on the gold.
Okay, that was on the monthly. Yeah, let me put it back on the monthly. What did I just do to my chart? Okay. All right, there's monthly.
Yeah, you see what I was saying the other day. Look, if you can blow it up a little bit. Okay, about there. Not too much. Squeeze it up a bit more. Okay. To me, this is resembling the first leg up from late 2008. Okay? It's got certain similarities, it ran up and then it pulled back. Yeah, late 2008. 2008. Here, right. This leg. That's it. Keep going up. Yeah, that one. Okay. So look at the similarities. Then you had a long run, a long move, and then a pullback.
Right.
Had the same thing here. The pullback is actually less than what happened back then. And then look at the surge all the way up to 1900. I believe we're at a point similar to where we were at 1100 back in 2010, before we ran to 1900.
I think you could be right.
Yeah, and in fact, there's somebody sending me something out of Germany. There's a guy out of Germany who's looking for 2000. Maybe even by the end of the year, possible late run. And then he's kind of agrees with me that we're going up to multiple thousands in the first 3 years of the new decade. Those 3 or 4 years. He also believes that we could have a big pullback in the market. Something really extraordinary happening. So that the writing is on the wall. I actually think if we go if we go up on this next leg in the same way as it went from 1100 to 1900, I mean, that's an $800 move. So, that puts me up to 2400, which is a reasonable target. And that's where Jeffrey Gundlach talked about 2400 about a year ago. And he's a pretty sharp guy. So I would say that his target might be achieved.
A reminder, folks, gold pays $100 per point. If gold goes from 1502 to 1503, that's $100 per contract traded.
Yeah, and the way this happens is, you see that two little feet that gave a little bit of a sell.
$800 move. We're talking 800 times 100. I mean, that's the potential that someone could look at to structure your trade, understanding the risk as well as the potential.
Well, also, we're starting from a higher level than 1100, so there could be an expanded component that might be as much as a $1,100 move. So that could take us up to 2,700 at a possible stretch to 3,000. It really could happen. So I would I think you got to focus on. I mean, I've been saying for months now, focus on gold because it's a whole new ball game, and we're in a. I mean, look.
What would a Hillary Clinton presidency do to gold?
Oh, it'd be go to 3,000 for sure.
And do you think she's going to step back in?
Yeah, I mean,
she's dancing all around the floor.
It could be part of the thing that drives gold higher, almost out of the gate. What I was saying before, and we can see it better on this chart. Look at the way we went up from that 1100, from the 700 area, right? Mm-hmm. Maybe I misread that. So we practically, we went from 700 all the way up to 1900. So it's actually a bigger move. It would be like going. So that's a $1,200 move. So yeah, 1,200 from 1,200, 2,400 from the starting point of this move. Mm-hmm. But what's interesting is each time there was a bit of a pullback, right? Mm-hmm. And they weren't very big pullbacks all the way up. Once we took out the previous highs, it just went. And I think that's the lesson we can
And that would be
draw.
Right here.
Right, exactly.
So we had a high, there's resistance, and this time we powered through the resistance. That would have been in September.
Then came back to test
2009,
it. And then after that.
Came back to test in October, absolutely right. And then off it goes.
Yeah. And then each time after that, the test, look, the test, the little red line that never went lower, there was a 1 month pullback each time, and then bang, advance. So, this time around, and look, each one of them was about a $200 up move, each one, mm-hmm. Right? So that's kind of what I foresee here. I see a $200 move up, right up to 17, and possibly because we're in an expanding component, we might see $200 to $300 moves ahead as the kind of sprint moves, the sprint moves to the impulse moves to the upside. So today, another thing is the dust, the J dust, which it's probably worth looking at that. JDST. DST, JDST.
There we go.
Because these things are, heading down to new lows again.
Oh, look at that.
And that's pretty bearish for gold.
Man, that's
bullish for gold. Sorry.
Yeah, it is.
Yeah. See, I mean, look at this consolidation. I mean, jeepers, you break down from this thing's going to zero. It's and they're going to have to recalibrate it. But this whole thing from the 55, the double gap down, and really the triple gap down, really, and look, and this sideways pattern, this is portending a very big break to the downside in the dust and the J dust, and a very big up move in the gold, and we're just breaking out to a new high as we speak right now. So the gold is in very powerful hands right now for sure, and it really looks like it's probably started its new up leg here.
Interesting.
So the
Well, there's going to be so
thing
much
is-
good trading between here and the election, and potentially beyond. But I mean, my mind's already racing ahead to the volatility. Closer and closer we get to November of next year.
Yeah, put up Tesla if you would, Dwayne. TSLA.
Oh, the short sellers got nailed on this one yesterday
Yeah,
to the tune of $1 billion.
yeah. And the thing is,
Today they got nailed on it.
you don't want to be betting against this guy, Elon Musk, too often. It doesn't seem to pay off. And, when you look at his performance in the space area, I mean, what he's pulled off there is just mind-boggling.
So this
And the
is a
same
gap
thing
of, what do we got, about $40? Almost $50?
Yeah, it's a very big deal. Look, it's very difficult to buy these gaps, but I would try hard to get a position on if it's your cup of tea. Obviously there's risk involved all
Here,
the time on
this
these
came
things.
out 3 hours ago. Short sellers betting against Tesla lose more than $1 billion in single day as stock surges. And this one pegs it. This was an hour ago. This one pegs it at 1.4 billion,
Yeah.
erasing 70% of their gains.
Yeah. So the
This thing.
what looks like will happen here with Tesla it certainly looks like it'll go to about $340, assuming we have a strong market, and it could be.
Now, this guy's historically lost money, John. How did they beat earnings? Help me dissect this.
I don't know. They certainly delivered better. Whatever it was that was better than they
Interesting.
expected.
Mm-hmm.
And so he's probably out of trouble now, and this stock could go from strength to strength again.
Surprised Wall Street with a profit per share of $1.91. Compared to an expected loss of 24.
Company that are doing better. I think that the solar thing that they took over and bailed out basically is probably they might be doing quite well or better. May have contributed. So can you pull that chart down again?
Yeah. Okay. You see this headline? Tesla's surprise quarterly profit is highly questionable and not at all sustainable. That's just one analyst opinion. But back to
that's what they always say. Yeah.
Which chart, John? The one right?
Sorry, the chart.
This one?
The chart. The blue. That one. Yeah. So 340 is a reasonable upside expectation for this, which would take it to the left-hand side. Up there to the left-hand, back to the left-hand side.
Right up here.
Yeah. Beyond that, it's got to get to 400 to really kind of fire up the engines.
Is that the all-time historic high we're looking at?
Now, on the other, while we're looking at that chart, the negative case, which is always worth looking at, would be that this was some kind of an impulse wave to the downside, to that bottom in the middle, right?
Mm-hmm.
In other words, we are in a bear market in Tesla, but this is a classic three-wave rally where we went up, pulled back to a B wave, and now we're in a C wave to the upside.
Well, see, that gap took out these highs right here.
Right.
I think that's important because that pegs the next resistance up here.
Right. Right now we're on a doji day with Tesla. So if the market were to turn down, and if Tesla was to turn down from here, and you can see see the three wave. You can see the three wave structure there quite clearly.
Right.
If you push it back in again, more distance, more history.
Oh, more history. Okay.
Yeah, okay. You see. There's the A wave, right, from the bottom. B wave, and now you have the C wave, equidistant, more or less. So, if this thing starts tanking from here, it's definitely going to be a whole different story. So, and if you're long Tesla, you'd probably want to have a stop in there to make sure that you don't get, because if it did start going down, it's hard to say today which way it's going to go, really.
You got a lot of wounded short sellers out there licking their wounds today, so they get on these message boards tonight and start hurling stuff back and forth. Who knows? And this is the kind of stock that trades well to gossip and innuendo and leaked secrets and, CEOs smoking a doobie on a podcast. I mean, it's a lot of fun. It's drama. It's entertainment. And people aren't investing in the electric car anyway. They're investing in Elon Musk. That's the truth about Tesla, I think. What else you want to look at?
Twitter. I think we need to look at Twitter. Twitter is in trouble.
Twitter. In trouble. How? Oh, about to break down, you mean? So, yeah. Okay, so I guess their earnings story wasn't quite...
They got a lawsuit against them too, multi-$100 million lawsuit. Or two.
What Twitter earnings? Twitter has projected third quarter revenue of $815 million to $875. That was 23 hours ago. Twitter stock plunges after earnings are worse than expected. Twitter's revenue rose 9% from a year earlier to $824 million. And how do they make money? The little ads on their sites?
They have promoted ads and things, yeah.
Total advertising revenue. Oh, there it is right there, $702 million. Okay. Oh, I hate these paywalls. I think you should be warned before you click that you're going to hit a paywall. Why Twitter whiffed. Why it may not get better soon. Okay, third quarter earnings were marred by issues in a product that advertisers use to market mobile apps. Companies no longer targeting ads in certain ways because it was using some data without permission, with less information about users. Some of Twitter's advertisers don't want to pay as much for certain ads. I advertised like for a minute on Twitter, saw zero response. So and I'm sure that people have good, especially these promoted tweets, like with this, the young lady, the Kylie Jenner, or the Kardashians. I mean, they get paid over $100,000 for a tweet. I mean, interesting times in which we live. So Twitter blamed its third quarter earnings whiff on the top and bottom lines Thursday. Issues with technology that help advertisers promote mobile apps. The unexpected miss sent Twitter shares down as much as 20%. So you think this is something they turn around, they overcome, or do you really believe they're in trouble?
Oh, no, they're going to overcome it. I just don't think they've got their...
What's the fellow's name, the main guy behind Twitter?
Jack Dorsey.
Jack Dorsey, yeah. You don't hear a lot about him, but he's a smart guy.
No,
he's made his fair share of money. Sure has.
Well,
he was part of PayPal too, right?
To be fair to him, I have not been... What's the word? Disconnected, or haven't been
following
for about 10 days now. Touch wood. After I've been here about 24 times this year, they knock you out, and because
I've never been policed by them, but again, I don't post
say you're a robot. If you have too many followers following you, I think that's maybe taken them a while to get their settings right, so that it doesn't knock people out every day, which was happening frequently. And they tend to clip every time that happens. You lose a few hundred followers, which is really annoying. And sometimes they have these purges where you lose 700 to 1,000 followers in a day. So it's really stopped. It seems to have stopped noticeably. One thing that I was staggered, I've got one of these monitoring services that tells you how many people you get a week and this sort of thing. And what I noticed is, it's kind of two steps forward, one step back with Twitter, because there's an awful lot of tire kickers who follow you and then they just unfollow you. So but if you're doing 1,000 a week, I used to lose maybe 500, and then it's down to 400. I got it down to about 200 now. So that's just because I'm really working hard on the content and things. So but what's interesting, I looked at it. Actually, shows you the 200 that got away, and honest to God, 2/3 of them were suspended accounts. I couldn't believe it. So that's there's a lot of people get their accounts suspended on Twitter. It's amazing.
What was his, Mitt Romney, what was his, he admitted that he was the guy behind Pierre Delecto.
Right. I haven't looked at that site yet to see what they say. Maybe it's being suspended as well. But yeah, look, as we're speaking, the gold stocks just keep clawing their way higher.
Which one do you want to look at?
Probably JNUG, maybe.
JNUG. That's the daily.
Yep. And let's look at Royal Gold. Yeah,
strong day. Trading on the high of the day right now.
Yeah.
If you can take out this high, then we fill this gap, and then the next resistance is up 131, 132.
Yeah, Newmont.
Potential $10 move there.
Right.
Newmont. Okay. Here we go. Same thing.
Yep.
This next leg could take this. We're 39.
I think Newmont has a really big upside coming from. It's actually the strongest of all the gold stocks right now. Most of them.
So it's got major resistance here at 42.
Yeah, I think once it gets through that 42 area, it's going to be unstoppable. It's good.
Yeah, if it gets through 42, the trip from 42 to 46 could be pretty quick.
Yeah.
What else you got?
That's about it, I think.
Okay.
The only thing is that look right now let's look at the Nasdaq because it's moving up quite well.
In Q.
Yeah, that's a fairly bullish chart. I think you'll agree, and it could be enough.
Daily for a minute. In fact, let me take one more notch at NQ.
Getting close to breaking through that 8,000. That's a very big deal for the Nasdaq. And you just that chart you had a minute ago. Look at that. I mean, this thing portends a very big upside on this.
Yeah.
Incredible.
Yeah, it sure does. In fact, if we take our Fibonacci extension tool and go
so it's probably telling you that Google and some of these other stocks are going to do very well. Actually, let's look at Micron Technology, MU.
Yeah, Fibonacci price extension, a measured move. Goodness gracious, would take this thing to 9,400.
Well, where that takes the
50%.
That takes the big Nasdaq to 11,000, which is my target. 11,000 on the big Nasdaq.
Is that right? Nasdaq. Okay, well then that's maybe doable. Okay, what did you just say to look at? What did you want to look at?
MU.
MU. Okay. Micron.
Yeah. Yeah, it's if it comes out with better than I guess it's had its earnings, but if it can get through that gap, start getting up above 48, could be a good sign for Nasdaq. Let's look at SOXL.
Semiconductors.
Yeah. Yeah, boy, this index is getting ready for a big run to break through 200.
So the fact that we got a high, a lower high,
look at that
and
thing.
another lower high, that doesn't cause you any concern?
Dwayne, you got a one-day island bottom there, a doji island. Look at that. That's pretty rare.
Yeah.
Because remember I said yesterday, that kind of dragged the market down, and then in the afternoon we had that late rally. So now definitely puts 200 in. Well, the 195, 200 in the crosshairs. And it's a very dynamic structure. Again, look at that; those huge swings. Probably portend the market up to 250 or 300.
It's got to take out that resistance, but what a great start! I mean, look at that gap and run today.
Yeah.
Very bullish.
And it's right on the high of the day right now.
Yeah,
and
almost everything
have a look
is, it
at
looks like.
TECL. Similar sort of thing.
What was that Sprint symbol we were looking at a while back? Something US, something.
Oh, I think Roku looks better today. Check out Roku. It kind of looks like it might be ready for a run too. See that little kind of flag formation there?
Mm-hmm.
That kind of looks like there's another up leg coming for Roku.
I like 150 to 160 on this.
Yeah, and
Actually, 145 to 160.
yeah, and let's have another look at keys we looked at yesterday. KEYS. Okay, pull back a little bit from an all-time high.
But on this one,
Maybe pull back to test 100 again. So keep an eye on that.
I mean, we got this nice this. So it could pull back, even more, and not break this trend. Now, this is a very strong love trend it's in right now.
With the semis up again, let's have a look at Xilinx today. XLNX. Not doing anything really. But
at one point during the day, it looked good. I mean, because the thing opened way down here, and we had a big green candle. So this is maybe some midday profit taking. It could turn around.
Okie doke. Well,
All right,
listen,
John.
thanks very much for the invite.
Thank
Have
you,
a great
sir.
afternoon. Okay, all the best.
Talk to you
Bye-bye.
soon. Bye-bye. All right. So we're going to jump back to those two lines that we were talking about. Two lines in the sand. So, picture this. It's 8:30, 8:25. You go into your office or log in remotely from your little island getaway. You get your Concierge Trade Alerts. You come to your chart. You put two lines in the sand. If we can take out this trigger, you want to be long. And if we take out this trigger, this line in the sand, well, we're going to consider being short. Everything in between is the market trying to make up its mind. When price approaches the trigger, you have to make a decision. And whatever decision you make, actually, there's three ways to approach it. I'm not going to enter on the initial trigger. I'm going to wait for a pullback and or a secondary trigger. Or I'm pulling the trigger at the trigger, come what may. I've got traders that do both of those. The third one, the one I think is the one to best serve you, is go to the chart, look at the chart, and let the chart tell you what action you should take. Okay? We know that we're at a weekly trading zone, next to the highest weekly trading zone. I don't know if this is 3053/54. That is the highest weekly trading zone for this week. I think we've got resistance at 3041. If we break and run, there's no news tomorrow morning to support that kind of. Some Fridays we have big news days. The markets can really run. I don't foresee that tomorrow. I mean, anything can happen. We could get a tweet. China could make an announcement about trade. Who knows? So this morning at 9:30 a.m. Eastern, this is the Wall Street opening candle. You see what happened? We opened right there, poked our head up. My friend Mike Reed used to use this analogy, and I can't think of any better analogy. He called it the prairie dog. If you know what a prairie dog is, good. If you don't, you can Google it. But they're little animals that live underground. They burrow and have a network of tunnels. And when a prairie dog decides to come out of his tunnel and, go do prairie dog stuff, I don't know, go to the market, go to church, whatever prairie dogs do, they don't just jump out because there could be predators. There could be those who wish them harm. So they'll stick their head up look around to the left, to the right, forwards and backwards. If the coast is clear, and they'll come up and out of the hole and go do prairie dog stuff. However, if they spot a predator, if conditions look inhospitable for any reason, they just duck right back down and take off. So even if a predator spotted them sticking the head up, right? I mean, they're down, they're into those tunnels, and they're gone. If I could put a little prairie dog head on this, I would, because that's how I see it. This is how Mike Reed taught me to see it. If you want to play the submarine game, we all live in a yellow. Up periscope. Periscope looks around. Not hospitable. All right. So here's how I want you to think about it. We're at a zone. We've consolidated. Okay. What do we know about price when it moves through a zone? What do we see here? Not so much here, okay? But and here's a good example. See right here. See these? John calls them two little feet. I don't know why, but anyway, there's two. Up here you just got one. This is kind of what can happen just above a weekly zone, because remember, if price closes above this zone, then that's a commitment that we're going to try and get to that zone overhead. And when we close below, that's a commitment that, hey, trying to get to the zone below. That's what the market is saying in market speak. So if this can happen, it's unfortunate that a concierge trade alert is so close to the zone. It was what, 3013? No, 3015. Is that right? $30.15. See, that's even more compelling. Look at that. It's actually one tick above the trigger. That's it. That's as far as he stuck his head out of the hole. One tick. Three choices. I'm going to trigger at the trigger. I'm going to wait for confirmation after the initial trigger. Third, each situation in the market is unique. So I'm going to go to my chart. I'm going to apply my indicators and my narrative, which is my understanding of this methodology as I was taught, and then make the appropriate decision. We're above the BBC. That supports a continued move. Blue and climbing. That supports a continued move. The only concern that you should have here is, will price just spike the zone like it did? Will it turn like this? Is it going to overshoot it? Again, unfortunate that a concierge trade alert would be so close to that zone. But it was, and you see what happened. Okay, let's say you make the wrong decision here. Well, you know what? I don't like that term, wrong or right. It's simply the decision that you've made based upon your assessment of the situation. So if you got long here, number one, where's your stop going to be? Remember, if you don't find the adequate risk-reward ratio, you shouldn't be in the move, right? I mean, based on a 30-minute chart, it looks like a little too much risk. Now, we have a methodology where we look and see if we can really find acceptable risk. This is also, one more thing I'll say about this. This was the 9:30 opening candle. Everyone who's a passport holder knows that I'll send out alerts around the clock, 2 a.m., 2 p.m., doesn't matter. It's whenever opportunity presents itself, with one exception, and only one exception. I will not send out an alert between 9:30 a.m. Eastern and 10 a.m. Eastern. Why? There tends to be abnormally high volatility during that 30-minute period. Now, I've heard it called the professional's hour, and I've heard it called amateur hour. The camps are divided. Should you trade it? You should not trade it. What do you know? My decision, and I'll never burn up any brain cycles worrying about it again, or even thinking about it. I watched the charts for years. I used to love, the opening bell, and just jump in, because if and it's a big if you were on the right side of the market, the profitable side, woohoo! I mean, that really sets the tone for your day. In fact, your day's probably over in about 2 minutes or 3 or 5. If you're on the other side, though, see, Wall Street opened right there, the top of that red body. That's where Wall Street opened. It opened at 3013.75. It then ran up to 3015.25, where it reversed. Okay. That's why, because the market, if you're ever going to get a head fake, or if the market's going to appear to be doing one thing and then end up doing something else, it's in that 30-minute period of time that it's a personal preference. Michael hits the ground running every morning, 9:30. He just trades right through it, whatever's in front of him. This is when I walk my dog, pet my dog, make my sandwich, read the paper, whatever. I do anything but sit here and try to trade through that. I just wait. So for all those reasons, there would be reasons that maybe you would not trigger in the first time, and as you notice, there was no second time. What happened was we got sent back down to support. Support sent us back up to resistance. Resistance sent us back down to support. Support sent us back up to resistance at the BBC, which sent us back down to support at the weekly zone, which sent us back up to resistance at the BBC. That's where we are right now. If you just keep in mind, when price is above the BBC, we anticipate higher prices. When it's below, we anticipate lower prices. Price is always trying to get to a weekly trading zone. When you approach a zone from below, expect resistance. When you approach a zone from above, expect support. When you approach the BBC from above, you also expect support. And when you approach the BBC from below, you expect resistance. Just like the zone. Okay? So price is pinging back and forth here. We go from support to resistance to support to resistance. Now over here we go from resistance to support to resistance to support to resistance to support to resistance. I pray that you can it just popped into your head. 1,000 light bulbs went off and you filled in the blank. When I said, and support to resistance, you said, and resistance to support. That's the high probability move. And if that flashed across the theater screen, the big screen in your mind, that bell's for you. Okay? Maybe this methodology is for you. It's all very logical. Okay? We could complicate it. We could convolute it. But we worked really hard to uncomplicate it, to unconfuse ourselves, to arrive at this simple by design methodology. And my challenge is still there, anyone who has a methodology or a system, I don't care how many moving parts it has, indicators, oscillators, gurus, dancing girls, it doesn't matter. If you'd like to do, like a taste test, we could, here's I've upgraded the challenge. we both put up X number of dollars, and we put them into a trading account at the broker of your choice, as long as they're a legitimate broker. We trade for a week, the CFRN Emini method. You trade your method, and this isn't to show who's the baddest dude in the whole damn town. No, people will get to experience live in real time this methodology, which is very complicated, and this methodology is very simple. We will take a look at the leaderboard at the end of the week. We will look at the results, but we're going to take the profits in that account at the end of the week, and we're going to donate after expenses every penny to the charity of your choice. I think that would be so much fun. I'd love to do that. So if anybody out there has a strategy, has a methodology, got indicators, oscillators, and you want to do that, raise money for charity, let's do it. Let's not even think of it as a competition. We're all going to look at the leaderboard at the end of the week, but let's not even approach it in that vein. Just some, old white guys having fun trading the markets. All right? All right. See, we're not all bad. Okay. Let's go to the Dow. So what happened here? Nothing. We did have an 11-point zone-to-zone move up, an 11-point move down, an 11-point move up, an 11-point move down. So 11, 22, 33, 44. Alexa, what's 44 times 50? Alexa.
Your device is offline. To connect, swipe down from the top of your screen. Then go to Settings.
Okay.
Network.
I'm not going to do that right now, but thanks. I will. Well, what's going to happen? How does that happen? All right, let's get moving. Dow. All right. Is the Dow really a cash cow? Let's find out. On the Dow, last night, Concierge said, consider being a long 26,860. Gloom, despair, agony on me. All right. Kind of similar to what we just saw on the S&P. Okay. Prairie dog pokes his head up, pokes it up again. Not liking what he sees. Down that network of tunnels is 26,735. Which is right about here. Okay. 26,735 down to the zone where we find good support, and then support sends us back above the trigger. But why did it stop there? Shouldn't it have gone all the way to the zone? Was there some kind of obstacle in the way? Well, let's see. I don't. Yeah, I can make a case for that. What was once support just became resistance. Happens all the time. But I'm thinking there might be a BBC in the path. Let's look. Bearish cross. So price pulled up. It didn't quite get to the BBC. It didn't actually do the physical touch, and sometimes it won't. In the live trading room, you'll hear Michael refer to that as a momentum trade, when price is unable to pull all the way back to the BBC, or pull, in this case, pull up to the BBC. So we go from resistance to support, back to resistance, back to support, and we just got back above the trigger. There's once, there's twice. This is the third trigger right here, live in real time. Now, from the trigger, from 730 to 670, 60 points at $5 a point. So a $300 per contract move, back above the trigger, $300 per contract move, And actually we went back above the trigger here and got about a $200 per contract move, and we just went above the trigger again. So 1, 2, 3. This could be number 4. Okay. Okay, Russell. Zone to zone to zone to zone to zone to zone. Since December 14th of 2009 and before, but I can't vouch for the before because I didn't watch it. I didn't trade it. I wasn't there live in real time. I can see it historically on the charts when I apply my formula, but every trading day since December 14th of 2009, we've published the zones. I have the historical record in my little journal. Every zone, every week. 8 different markets. Or no, 4. Now, I have them weekly trading zones for the yen, for soybeans, a couple other markets done by request, but I just kind of settled into a groove. I now do the weekly zones for the S&P, the Dow, the Russell, the NQ, crude, and gold. Okay. All right. Last night on the Russell, consider being short 1552. 1552. Okay. We're consolidating at the zone. We trigger 1552. We have a trade 2 target at 45. That's 7 points away, $50 a point, $300 per contract traded. But remember, zones are an area, and on the first trigger, we didn't get all the way to the target. Back above the trigger. Second time, touch the target, or touch the target, touch the zone. Same thing. And now it looks like the Russell's trying to get back above the trigger. So we can do what again? Yep. You're catching on. Gold. We had a $300 per contract move up to the zone overhead at 99/1500. Now we have a $1,000 per contract move. Trigger from 96 to 99, $100 per point, $300 here per contract traded. If you stayed with it, you hit 1,000. So if that's the trade 2 target, what would ever possess somebody to, quote unquote, stay with it? Remember crude a couple hours ago when we went over that? You're going to see the same thing right here with gold. That move was, yesterday was crude, today's gold. Okay. Remember blue and climbing? Remember the step line on the left side of blue and climbing? That's for a long trade, a long alert. So remember, we're waiting for the step line to cross, which it does right there. We're looking for the first, because it's a long move, we're looking for the first red candle to close below that step line. And that's a good bingo right there. Closing price of that candle, 1503.80. Okay. Now, from 1496 to 1503, That's a $780 per contract move. This swing high, which is equivalent to $1,000 basically, well, the issue is it's a swing high. And everyone would love to get out at the swing high or the swing low, but you don't know it is such until after the fact. The exit signal can never get you out at the swing high or swing low for the reason just explained. But it does a pretty good job of getting you out near the top. Now, here's a situation where we got an exit signal, but now look what price has done. That's going to happen. But the good news is, by waiting for the exit signal, waiting for the chart to tell you the move was kind of running out of steam, it got caught a second wind here. But by doing nothing here, you turned a $300 per contract trade into a $780 per contract trade by virtually doing nothing, just waiting for the exit signal to appear. Typically what will happen after the exit signal is we go sideways a little more, and we either drop to the BBC, or as we walk sideways, the BBC rises to meet price, which is not the same as price pulling back. Price pulling back is good. Sideways, waddle, and a rising BBC. I'm not crazy about getting along when those two come together. Okay? All right. In queue. All right, I got to fix this. And we got to go back to 30 minutes. And we got to get on the right contract. Okay. All right. I accidentally deleted some of this week's zones. I should be one at 36.37. Take a back kiss to the movie Saturday. Anybody seen any good movies lately? Is there anything worthwhile seeing in the theaters? 36.37, and then 92.93, and then 45.46, and then it jumps all the way up to 80.11. But let's get it on here because it may become a thing. Remember these weekly trading zones that we're looking at here, that I'm putting on the chart. They go out to the partners and passport holders Monday morning, 6:15 a.m. Eastern. Okay. And there's still one more in queue overhead, all the way up at 81.79/80. Doesn't seem like we would get there tomorrow with no news on tap, but I won't rule it out. Okay. So last night, 24th, consider being long, 79.35. Okay. 79.35 to 79.45, that's a 10-point move. NQ pays $20 per point, so that's a $200 per contract move. This first trigger did not get there. We pulled back. We made a second run. We made it to the trade 2 target and then some. And we traded as high on that move as 79.60. So that was 35 to 60, so 25. That's a $500 per contract move. Back below the trigger, important prices, important areas, almost always tested. And this one we hit 78. So let's call it 75 to 35. That's an $800 per contract move right there over the course of 2.5 hours. Now the reverse of that was 78, 77. All about putting those two lines in the sand and then just waiting for the chart to tell you what to do. And it said go long, go long, go long. And of course we zone, the zone, the zone, back to the zone, up to the zone. You got it. Okay, time to head off to the good word for the day. We had a bullish cross yesterday morning, 5:30 a.m. Eastern. Since then, we did a leg and a retracement, a leg and a retracement, leg and a retracement, leg and a retracement, leg and a retracement, a leg and a retracement. We're in the process of doing another leg. And the final, the highest weekly trading zone, no, I'm sorry, 80.11 overhead. I think that's very doable. Right now, price is trying to get to the zone overhead. Obstacle. Obstacle. If it can get through here, then it has to deal with this. And if it can get through this, boom. So what do I like? 79.95 to 80.05. Oh, you betcha. You see, I don't have to be involved in this battle, in this skirmish. Let them duke it out. Let the buyers and sellers duke it out here. Channel, channel, channel. Let them duke it out here. And then when there's nothing overhead but clear sky, that's my little window of opportunity. Off we go. And if the move supports it, I might wait for the exit signal. You never know. Okay, good word for the day. Oh, tonight is Thursday, workshop. Partners and on the trial, if you like what you see, change your thinking, change your trading, and change your life forever, I'd be happy to spend a little time with you. And then you'll be able to get into the workshop tonight. Okay? All right. Good word for the day, and I'm looking for it. Yeah, there's something going on under my hood that I sense. I'll get to the bottom of it. All right. Are you blessed today? Are you? Genesis 12:2 says, I will make you a great nation. I will bless you and make your name great, and you shall be a blessing. Okay. We're talking about prosperity again today. When we read the scripture, the first thing that probably comes to mind are all the promises that God gave to Abraham and to the nation of Israel. Now, it has occurred to me that there's perhaps a much bigger lesson that we can learn here. The focus and the sermons tend to be on the part of that scripture where God does the blessing. But why did he bless him? He says, I will make you a great nation. I will bless you and make your name great. and you shall be a blessing. The Lord told Abraham, I will bless you so that you can be a blessing. Abraham was blessed so that he could be a blessing. And friend, the same is true today. The more things change, the more they stay the same. God has done so much for me, as I'm sure He has done for you. He has blessed me in more ways than I can count. I'm sure the same is for you, because He is no respecter of persons. He's blessed me in so many ways, and I don't just mean material things. In fact, that's the least of what I mean. The biblical definition of prosperity is much deeper than a few shekels under your tunic. God has blessed us with so many things, the most important of which is His mercy, in that He died for sinners like you and I. You probably say, speak for yourself. Hey, come on, I know the heart of man. It's desperately wicked. It's in the book. Keep up. He's bestowed us with so much grace. He allows us to come into His kingdom and be a part of the great things that He's doing. What we have received should not only be for our own enjoyment, but for the salvation of a dying world around us. God gives freely to us so that we may give freely to others. Let's not be afraid to give out the blessings God has granted us. I encourage you today, friend, share God's goodness, because to whom much is given, much is required. And that's our good word for the day. Thanks so much for tuning in. Hope to see you in the workshop tonight. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember that there is no way to return on investment and see a human life with hard and trade safe. Any financial guys on the show is our host, Dwayne Reeves, his co-host, to take a 1 week free 3 830. Information discussed on the or sell any security. Always your home broker or financial planner before making it.